Welcome back. You're still tuned into Halftime Report. Chalet Hotels is buzzing in trade after reporting a good set of Q4 numbers. Margin support came in from annuity business, but the hospitality business was impacted by the West Asia crisis. Shwetank Singh, the Managing Director and CEO of the company, is joining us now. Mr. Singh, good afternoon. Thank you so much for tuning in, for joining in. You spoke about the impact because of West Asia crisis that came by because of the occupancy decline. But overall, if we look at the ADR, that was up 8% on a YY basis. What is the FY27 guidance specifically in the hospitality business? What kind of growth are you looking at, or will we see an impact because of the crisis?
Well, good afternoon, and thank you for having me on the show. As an industry, we have become much smarter now. Pre-COVID, we would look at the occupancies drop and we would say, let's drop the rates, get the demand in. We've now realized as an industry that that's not going to happen, and it's absolutely a criminal sin to leave the money on the table. So getting smarter with our revenue management, you can see that despite the fact that there was an occupancy drop, we actually increased our rates, and that was the trend throughout the industry. Moving forward to what the next year looks like, this quarter has actually surprised us, the current quarter that we are in. And actually, the results have been better than what we had anticipated. The clarion call by our Honorable Prime Minister hopefully should also help increasing domestic tourism. Post-COVID, I think in general, people have been, very attracted to shorter travel, to leisure destinations, etc., and that's playing out. And we believe that it continues to be strong and will continue to be strong in the next year. There is some short-term pressure, mainly on the foreign tourist arrival, and as a result, we did lose some business in March and also the pickup in April. But overall, this coming quarter looks quite strong, and we should be comfortably in double digits in terms of growth overall.
Double digits. Would it be high double digits, low double digits? What are you targeting?
Let's call it double digits at this stage.
Okay. So, your RevPAR has been at 9,226 in FY26. The ADR has been 13,727. On both of that, you'll see a double-digit growth in FY27 is what you're saying.
Yes, I mean, ultimately, RevPAR is a mix of occupancy and rate growth. And we expect the occupancy to bounce back a bit for sure. We have also pivoted on some of our segments, and therefore there could be a slight rate correction, not necessarily downwards, but maybe not at the same pace of growth as usual. And as a result, the RevPAR should grow in double digits is what I'm talking about.
Okay. Your commercial real estate has done well. 28 crore monthly run rate in March 2026. That's around 360 crore rupees in FY26. What is the target there? You are adding more projects, is it? And what kind of occupancies are you seeing in the commercial business?
That's correct. Commercial real estate has become a very serious part of our business now. At 28 crores exit, we expect that to rise up to 30 crores with the existing supply that we have. And right now we are at about 90% occupancy, give or take, on the commercial real estate side, which is at 2.4 million square foot today. We are adding another 900,000 square foot of commercial as we speak, and that should come into play by the end of this year. Let's put it this way: that the leasing of that is very likely to happen in the following financial year, thereby giving us a big impetus and growth on the revenue side coming from commercial real estate. The beauty of commercial real estate business is that it is predictable. And most importantly, it comes at very high margins, close to 100% flow through directly to the bottom line. So
Mr. Singh,
it is a very interesting business and continues to hedge our risks on the hospitality side.
So you said 30 crore in monthly run rate in FY27, plus the 900,000 square feet of new leasing that would come by as well. What would that take the monthly run rate to in FY28 once the occupancy comes in that new set also?
It's difficult to give you an exact number, but we expect the overall revenue from commercial real estate to get up to about 500 crores, between 450 to 500 crores eventually once the new supply comes into play. So at about 30, if we get to 30 with the existing, that's 360, so another 140 to 150 should come from the new supply.
Okay, all right.
So that will be about 42 crores per month in run rate.
All right, so that will happen from FY28, FY29. Give us a sense of your updated hotel opening pipeline, the expectations from the Udaipur foray as well. You are investing 171 crore there. Then there's this commercial property that is coming by as well. What is the total capex that you're putting in those two? And what does that do to your balance sheet?
So right now that the capex is the total capex that is not producing results for us, which you can loosely call capital work in progress, is at about 830 crores. So and we continue to deploy capital. When once Udaipur comes into play, we will be deploying capital there as well. Just to give you a sense how well we are on our how well we are doing on our balance sheet. If you look at the last 2 years, we have invested close to 1900 crores in capex, and we still have had our net debt come down from 2500 crores to 1900 crores. So that's actually a 600 crore improvement on the debt side as well. Continuing into the future, we expect to continue to deploy on the capex side, and it will be very adequately funded by our internal accruals. We also have a large headroom to grow on the debt side, so we are very adequately financed for the capex and for the future.
Okay, so adequately financed. So debt could increase from these 1900 crore levels, or would it?
Yeah, sorry. It is likely to increase a little bit, but it should peak at around 2,500 crores. That's about it.
Peak at 25. So despite the annuity money increasing or coming in, because that will increase your cash flows, you will still need more debt for expansion?
Just a little bit at the peak level, because I'm talking up to FY30, all the way up to FY30 with what we have in the pipeline. But that's maths. As and when the internal accruals grow, that would be our first port of call. And that's how it has been so far, as you can see.
All right, take that point, Mr. Singh. Thank you so much for joining us with your take on what the outlook is, bullish plans going ahead and across the board, be it real estate or commercial real estate as well. That's the word coming in from Chalet Hotels. The stock is at the day's high, so is the markets. There's a sharp recovery from the lows of the day. The mid-cap index, be it the Nifty, all of them are surging from the lows, so keep an eye out on that one. But with that, we'll slip into a short break. When we come back, we'll get to more on the markets and stock-specific action on the other side.
For over 25 years, CNBC TV18 has been the guiding force for investors, steering them through the markets.
Start your trading day with cutting-edge insights and expert analysis.
Seize every opportunity by decoding the forces that drive the market.
Equip yourself with strategies and guidance from India's biggest market mavens.
Invest with confidence as we beam live from the CNBC TV18 Motilal Oswal studio.